the physical metal situation in London is very tight, gold and silver, but especially silver.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and it's an honor and pleasure, as always, to check in with Dave Kranzler of Investment Research Dynamics for Dave Kranzler's Precious Metals Hour. We won't be going an hour today, but certainly metals continuing to rally. Maybe we've seen a break in the rally over the last week or so, but still up quite a bit on the year. And with that said, Dave, how is it going over there, my friend?
Not too bad. How about with you?
Pretty good, especially with the metals. In case we needed an extra bid in the market, Donald Trump's Twitter feed was active again this morning. And apparently now 1% rate cut, not enough. He wants rates down to 0 or less, which seems like he's advocating negative interest rate territory. What do you think about that, Dave? And what does that do to the gold market?
I mean, I don't think much about it. It was obvious that's where he was headed. He knows that keeping the stock market going is his ticket to re-election. And if the stock market, if the Federal Reserve stepped away from intervening in the markets, and I'm not saying they directly intervene in the stock market, but certainly the Exchange Stabilization Fund does, of which the Fed is part of, then the stock market would fall apart very quickly. I saw an article, I guess it was on Zero Hedge. I don't know the original source. And apparently, like for, I don't know, the last 6 months, maybe the last year, the primary buyer of stocks has been corporate buybacks, but it's also been central banks. And, you know, the Fed, like I said, unless they've got secret offshore accounts, I don't think the Fed's directly buying stocks, but we know, I mean, you can go to the Swiss National Bank website and see their stock portfolio, and it's got probably by now $100 billion worth of US stocks. Apple and Amazon as two of the largest holdings. So I think General Electric's a big holding, Boeing, they're getting crushed on GE. So, I mean, in my opinion, and I think Trump, like every other president, when they get elected, realize that once they get in there, they don't call the shots other than on a superficial basis. I think he understands that one of the tickets to him getting reelected is making the stock market move higher. I mean, in 2016, with the Dow at 17,000 and he's campaigning, he called the stock market a big, fat, ugly bubble. Yes. Well, corporate earnings are declining now. The only fundamental aspect that would be bullish for stocks is interest rates and money printing. And we've got the Dow is what, 10,000 points higher than it was in 2016. So if it was a big, fat, ugly bubble then, what is it now? I mean, yeah. It's Chernobyl waiting to happen is what it is. You know, there's going to be an eventual meltdown. But when he started browbeating the Fed about taking rates down to 0, I mean, it was obvious his next, you know, where can you go? He's not going to ask for higher rates because that'll topple the stock market. So once you get to 0, the only thing you can do is go negative. And it won't be long, in my opinion, before he starts beating on them to start printing money again. And I think at some point, and I wouldn't be surprised to see this happen, because this guy, I observed him from the minute he got into office, and he kind of has a totalitarian dictatorial bent. I mean, he came out of the gate charging like a bull with executive orders. He's forcing the wall on us, of which maybe at most half the population probably supports, and probably less than that if you had an honest poll taken. And you know, there's no reason why he wouldn't float out there an executive order or the threat of an executive order for the Fed to directly buy stocks. And what's ironic about this is if the economy is booming, as he and Larry Kudlow, you know, get on TV and tell us every chance they get, and Trump jumps on Twitter and tells us things are great, why do they need 0 interest rates? Why do they need money printing? I mean, it's absurd. But he knows that. taking rates down and taking them negative is what's going to inflate the stock market. And he equates a higher stock market with re-election. He's a pretty simple guy. I mean, right? He likes, I guess, Big Macs or, you know, one of the McDonald's products, and he likes to have the TV remote in his hand. And now he also probably rests his, I can see him resting his laptop on his belly in bed, you know, with fries, Big Mac, watching, you know, Fox News on TV, sitting there with Twitter having fun. Good to be king.
Yeah, maybe the Big Mac is sinking in there, because one of his other comments he suggested today was to refinance a lot of the U.S. debt, which on one hand makes a lot of sense. On the other hand, that's the problem when you have trade wars against everyone who could conceivably buy it. And I think the only person who's going to refinance that debt would ultimately be the Fed.
I disagree that it makes sense to refinance Treasury debt. What makes sense is to cut government spending and get that debt level down. That's what makes sense. I mean, all you're doing is kicking the problem down the road some more. You know, I mean, it's only a matter of time before the U.S. issues a 100-year bond, and the only reason people buy those things is for the price action, the convexity. You know, as rates go down, the price shoots up. I mean, that Austrian 100-year bond is, I think, in the last 6 months, has doubled in value or something. I saw the numbers on it the other day. That's the only reason you would buy that paper. So, I mean, the country is headed towards a debt implosion. And, you know, it's just a question of whether it happens because the Fed has to print so much money to keep the system supported that the currency ultimately collapses. But we're going to see that in every country, or, you know, every country that has the ability to print its own currency. Like in Europe, you know, it's the ECB. So Germany or Italy can't go out and print their own currency unless they leave the EU. But we know China's printing money. Obviously, these South American countries are printing the crap out of their money supply. And it's not going to be long before the Fed starts printing again.
Yeah, it seems like ultimately they're doing this dancing act of, you know, who's printing or maintaining independence and all that. Yet it seems to me that the Fed ultimately wants to do what Trump wants them to do and probably will do, which when you think about then back to the gold and silver markets, you know, I get it that a lot of people are still wondering, are we seeing another false start? Obviously, 2016, there was a rally, then that came back in pretty quickly. Although it seems with this dynamic that more likely to be the beginning of a real rally this time.
I mean, you never know for sure. I mean, in reality, the rally in gold, the move higher in gold really started at the end of December 2015. I'm looking at a chart of GLD here, and it's, you know, there's a nice little upward channel here that gold and silver are volatile, not the least of which because of all of the intervention that occurs, all of the official intervention. But I mean, really, the move in this leg of the bull market, it's started at the end of 2015, and we had a huge run up then, and that bothered me. It happened too quickly. It went up too much too quickly, and then we had a sharp correction, and we've had another pretty sharp run up. I mean, I'm just looking at GLD. GLD has gone from, you know, it ran from 112 to 145 between August of 2018 and last week, or a week and a half ago. I mean, that's a pretty sharp run up, especially when you look at it from the beginning of the summer. I mean, it went straight up. So anyone who would expect that not to correct or pull back is crazy. And of course, the manipulators, the price management team is going to have a heavy hand in that. So I mean, I don't know how long and how deep this pullback will go. You know, and again, I preface that by saying it's partially natural market trading function and partially artificial from direct intervention. So um, again, I think if you're never going to time the tops and bottoms perfectly, just like you're not going to time the troughs and peaks of a rising market perfectly. So I think you just gotta. I think James Turk probably has the best advice: invest a little bit every month.
Right.
And then it averages out over time, your average entry price.
Which makes sense. And curious what you think about, I know your general views about those ETFs, GLD and SLV. How do you factor in when we see, at least on the report, whether metal is actually going in there or not? We have seen large inflows into both of them. In the silver ETFs in particular, the reports are at least showing 120 million ounces over the past 3 months, which, based on what I've heard from bullion dealers, certainly sales are up, but the 120 million ounces would seem not just like random investor buying, but we hear China may be buying, well, we know they're buying gold, rumors of them buying silver. How do you factor that in? Because certainly if there is someone out there taking that large of a chunk of metal, that would seem to be related also to what we've seen the last couple of months.
I mean, what you see in writing is just hearsay. Of course, there's a ton of cash that's going into these trusts, and that's all we know. And they have to, the prospectus says they're supposed to convert the cash and buy silver with it. So if cash goes in, they're going to report that silver went in. And even just technically, the silver doesn't go in all at once, even if it really was going into the trust, which I don't think it is. I wrote a report in 2009, and James Turk actually edited it for me. It was an extension of a report or an analysis that he did when GLD filed and for it to go public in 2004. And as part of that, I read through the prospectus, and I was like, as a longtime financial industry professional, and I've got plenty of licenses and had to, I've studied all the regulations, et cetera. I was shocked that the SEC approved GLD for public issuance. I mean, it's set up, and same thing with SLV. They're set up so that there's no way to know for sure whether or not the gold or silver's in the trust and how much is, even if some of it is. I mean, I'm sure they put some in there, but there's no independent audit. There's no, you just have to take the trustee's word for it when they say, oh, this is how much went in. No one knows for sure. And if you read the prospectus, I can't find my report. I was going to read some quotes from it, but they're set up as an intricate webs. So the custodians, so with SLV, JP Morgan predictably is the custodian, and with GLD, HSBC is the custodian, and HSBC at one time was the largest gold trader on the COMEX, paper gold trader.
Right.
So, it made sense. I mean, they're two primary bullion banks, right? And they're basically the same flavor, just one's based in London and one's based in New York. So, so they're the custodians, but they can hire sub-custodians. And there's the trustee has no right to demand to go knock on the sub-custodian's vault and say, let me see our gold. They can't do it.
Right.
And the sub-custodians can then hire more sub-custodians. So it's been set up as, again, it's a Ponzi scheme. And at the time, I equated it to Enron. At some point, when the physical market breaks the paper market, you'll see the price of GLD and SLV go south while the price of gold and silver go up, and you're going to be scratching your head. Why? Oh, well, if you did real research before you invested, you'd understand why. So there's no way that amount of silver is going into those trusts. Now, I did a podcast with someone a couple of weeks ago, and we talked about the silver situation, and because there's plenty of rumors floating around, and I'm hearing them from good sources, that the physical metal situation in London is very tight, gold and silver, but especially silver. And India, the government raised its import duty on gold, and I guess usually India is a lapdog of the West, and the West probably said, hey, you got to slow down the gold buying of your population, because they were buying gold in quantities about as large as that I've ever seen them buy gold over the last 12 to 18 months. And even like in their seasonal low periods, they were buying a lot of gold was going into India. So they unexpectedly raised the import duty, and it quashed the import demand for gold. Now, I'm sure on the other side of that equation, I can guarantee you the smuggled amount of gold that goes in there increased a lot. I saw an article, I don't know, maybe a month ago, that said that the amount of smuggled gold being confiscated at the points of entry has gone up quite a bit. But what happens is when gold becomes too expensive for the Indians, or more expensive than they want to pay for it, they switch to silver. And so I did this, we were talking about the situation. I said, well, and we're talking about the silver situation. And I said, well, let's not forget, the Indians aren't just sitting on rupees when they make it, as they earn them. They're converting it into either gold or silver. So I would bet that they're converting a lot of it into silver. And literally, like 2 days later, there was an article on Yahoo Finance that talked about how imports of silver into India have soared. So it's kind of an income and substitution effect, one of the laws of economics. Gold's become too expensive on a relative basis, so they substitute silver. But culturally, they're not going to hold on to paper money. And we've seen that. The government certainly tried to corral them into paper money for the better part of the last 8 years, and it doesn't work. So, and the same thing is happening in China. For some reason, well, I think I know why, but the government seems to be restricting the amount of gold that flows into the Shanghai Gold Exchange. And I think what they're doing is, I think the Central Bank of China, the People's Bank of China, is buying a massive amount of gold right now. And they're the only entity that doesn't have to source their gold from the Shanghai Gold Exchange over there. So I saw there was another article that talked about how all of a sudden silver consumption has gone up in China. So, I want to circle back. That's kind of a long roundabout way of saying, I honestly don't think that amount of silver is being put into the SLV trust. And, I wanted to give my reasoning for that, but I always like to reference the famous CNBC episode where Bob Pisani makes this big deal out of being inside the GLD vault, the HSB vault, the custodian for GLD. It was like one of those shows on TV, those mystery shows, Who Done It, and they point him over to a pallet of gold bars, and they go, yeah, that's our gold over there. And he picks it up, and the camera zooms in on the serial number. Some enterprising person looked up the serial number. The gold didn't belong to GLD.
Yeah, it's funny you mentioned that. He was actually there when I was still on the New York Stock Exchange, and after I was into gold and silver, I went and talked to him one day about it, and it was just the mainstream, like, gold alien hunter, get out of here, buddy. And so not surprising. Last one before we wrap up there, my friend. Any thoughts on the shares versus the bullion prices, where we've seen some rallying, perhaps not as much as some folks may have expected, and it sounds like a lot of the fund managers I hear from that still, it's kind of wait and see. People are wondering if this is for real or not. So curious what you're seeing with the shares.
Well, the shares are just like gold and silver. I mean, the shares have had a pretty big run. I'm just looking at GDX, and it ran from 21 up to 31. So, I mean, it's almost a 50% rate of return over. And the run started May 29th. So essentially 50% in 3 months. What more do people want?
Yeah.
I don't know how much. I mean, I think you probably have to hold your nose and buy one of these insanely overvalued unicorn type stocks to hope for a return better than that over a 3 month period. And 50%, I guarantee you Tesla or Amazon or Shopify haven't run that much in the last 3 months. So, and I will say, yeah, that some of the juniors are lagging, but a lot of them aren't. I mean, in our portfolio, we had in the last week of August, we had a handful of stocks that were up 30 or 40% just in the last week, and that's what these juniors will do when they start moving, and they really start to move. But the mining stocks, if you just run ratios like GDX as a function of the price of as a function of the price of gold, or the ratio of, take any junior mining stock index you want as a ratio to gold, and the stocks are still extraordinarily undervalued relative to where they've been at any point in the last 20 years, really since the secular bull market in the sector started. So, and to me, it's a good sign if people are disappointed in how the shares perform. Although, again, I don't know how you're disappointed over 50%. I mean, even with this sharp pullback in the stocks, it's still up over 33% in 3 months. So, but if people are disappointed in that, good. I want them to be disappointed, because it means, the sentiment still has a long way to go before we can say, oh, there's too many chairs on this side of the ship.
Yeah. Yeah, and certainly a lot of them are up. Obviously, you mentioned the GDX. Perhaps I'm thinking more some of the silver stocks, or just certain points where it seems like on some days where you'll see the metals up a little, some of these have gotten pounded a little bit, but like you point out, certainly up overall. And perhaps on that note, I'll mention that you do publish the Mining Stock Journal.
Just 1 second. I mean, in 3 months, First Majestic more than doubled. Seems okay to me. I mean, there's some silver stocks that aren't real silver stocks. There's still, and I talk about this in my Mining Stock Journal, because people ask me about, oh, what about this stock? And I'll look at it and I'll be like, well, do you realize that that company's quoting a silver equivalent number, and 80% of the mineralization is lead and zinc and copper, and that's not silver. Those are base metals, and those are going to probably go lower if my view on the economy, the global economy, is correct. So, but I mean, a lot of these stocks have doubled in 3 months. Endeavor Silver went from $1.70 up to as high as $3.10. It's still at 250. So it's up almost 50%. So again, it's like anything else. We'll get to a point where the rising tide will float all boats, whether the companies are, whether some of the stocks are dogs or not, and don't deserve to be valued where they're valued. But the good ones are going to rise, and it'll be justified. So First Majestic and Endeavor Silver are 2 examples of silver stocks where the rise is justified. They have a lot of silver, they produce a lot of silver, and when the price goes higher, they're basically money trees. So, again, like anything else, it's a stock picker sector. So, and and again, just like the general stock market, it's easy to step on landmines.
Yep. Well, fortunately, you help folks out with that, and perhaps in wrapping up, you can let them know where to find you.
Sure. My website's investmentresearchdynamics.com. And on that website are links where you can find out, there's more information about my Mining Stock Journal and my Short Sellers Journal.
Well, they're good reads. I am a subscriber. I actually have last week's Mining Stock Journal to catch up on, so I will look forward to going through that.
What, you haven't read it yet?
Well, it's been a long week so far, but we're catching up. Maybe that's why I'll get my questions answered. And
man, I get subscribers who email me before the market closes. Are you publishing today? I'll be like, come on, dude. End of the day, as usual.
Yep. Well, you give some good advice there, and folks can find you at Investment Research Dynamics. Thanks again, as always, for joining me today, Dave. And
thanks for having me, Chris.